Let's do this real quick. Hi guys, this is Simon with Trade and Perform Coaching doing the trade review and kind of reviewing the setup specifically for 4/7/2020. There was some question in the room as to exactly what the setups were and how we were supposed to view them, and so I'm going to go through and do that. So I'm going to start with the small block, and I'm going to go down to the very tiny block. So number one, important disclaimer and reminder for all traders and investors: the webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. Long story short, you can lose your ass trading futures. It's a hard business. Have a risk management system in place, right? Don't follow me blindly. I do lose money sometimes, right? And know your limits and make sure that my risks and my parameters are similar to your risks and your parameters, right? We probably have different goals because I've been doing this for 22 plus years, and maybe you're just starting. I may have different goals, but my setup and my goal is to find good intraday, high odds trading locations that will keep me with a high win rate and not necessarily a good RR rate, but a high win rate that lets me get good scales and gives me a chance to trail out, okay, or scale out the trade and then run it from there. So I'm going to start from the big block to begin with. First of all, what do we expect going into the day? That we would have a balanced day of some sort was my original thought or thesis coming in on today. So when you say that, usually you're looking for the edges, right? Consider the environment we're in. There's a ton of news, right? We're coming off a bounce where we've had a big bounce off the bottom, right? Buyers and sellers, no one had a particular edge today, one way or the other. Clearly, it's crazy, right? You don't want to trade the last hour, that kind of thing, right? Hold on one second here. Let me find. I am looking for my intraday chart, but I cannot seem to find it to save my life here. ES profile, 5 minutes. Okay, so these are the levels we posted this morning, right? So this is the building block of our trading ideas. And the number one trading idea I had today is I said, see this white zone, right? And I drew it out for everyone. So I want to see above, then below, then backside test for a potential short. Of course, I didn't imagine when that was going to happen that we would be facing crazy land, right? And that we'd be having 50-point rotations up and down, because that's really what they did in the last half hour. They just raped shorts and longs both ways, right? And I said if we got an over here, this would be where my focus would primarily be, right? So, right, reverse course. Think through the process, right? If I'm down here and I'm underneath here, I'm not thinking long over here because I'm underneath this white zone, and I know that these white zones are critical for over-under. My guess is when we look back, if we can't get back about 26.92, we're going to have a big extension to the downside from here. Okay, next, I'm going to duplicate this chart real quick, and I'm going to erase all lines. Oh, actually, there's an easier way to do that here, but because I'm going to go to chart settings, and I'm just going to release this chart from its slave. There we go. There's two critical areas. The low, the last swing low from yesterday evening, because that's the swing low on the session, the last swing low, right? We had this rip from here to here. Pretty much they took off at 11 o'clock, and they went to the high, and then we exceeded it right over here, right? So no matter how you define it, that was a big rip. So I'm going to come over here, grab a very basic technical analysis tool, right? Price retracement tool. I'm going to go from here to here. Now, what do I know about this area that I said in the morning? I'm going to highlight this area. And I said, in this area in particular, right, and we were looking for a long out of this location, right, this morning. And I said, even though I didn't get the fill, right, we had the right idea, just in backside test for us to get the long. And I said, you're likely to get a buyer there, right? But also, see how this day is starting off right over here? This is starting off like trend day up. If you looked at that chart at 8 o'clock in the morning, you'd go trend day up. So there's a certain list of rules. I'm going to give them to you right now if you need them. First of all, on most trend days up that are true trend days up, you never see the 50 retrace. If you do, it usually gets front run. The fact that it goes into the 50 retrace does not negate a trend day up, but it minimizes the odds of it happening dramatically, right? It mitigates the odds of that happening dramatically. Okay, so next, so once we get in here and we get past that 50 retrace, yes, we expect a bounce, but it has to be suspect. Secondly, we never make it back up. Now look at the other side of that retrace. Okay, I drew it out in the room. I'm going to draw it out again. Where'd it go? To the 764, right? Now you could have said the same thing, but what will usually happen over here, you say, well, Simon, we got behind the 62 retrace. But this wasn't trend day down over here. I would expect us to get behind the 62 retrace and go to make new highs, right? So context says, hey, on trend up, I shouldn't get past the I shouldn't even get to the 50 retrace. It should do some kind of consolidation here around the 382 and then continuation higher, right? So this doesn't have the same impact as this does. So when I got over here and I said, hey, look, we've closed, I said that right here. We've closed behind the 62 retrace, and I drew this out in the room, right, guys? I was trading. I said what usually happens is we close behind the 62 or the 768. We'll come back to the 50 retrace, then we'll continue lower. Now, we haven't even gotten to the good stuff of how we're entering the trades, because I had, I think, one stop today. Guys in the room, correct me if I'm wrong, but I think we had one stop, right? So when we got behind that 618, I said, hey, we're behind the 618. Odds are the market's going to find a way to close on the low. I said it doesn't happen every time, but the odds go up extremely. That'll come important in just a little bit, right? So I don't know how it's going to do it. I don't need to know how it's going to do it. There's three considerations, right? Number one, is the market moving in a way that I can understand and process? That's very, very important, right? I'm going to give an example of that. CL. CL, even though it broke lower today, I'm not a multi-day trader, right? So when it hangs up for the first, 3 hours of the day, right? When it's all stuck in this stuff right here, and it just falls out of balance, I know some people get that trade. But I don't, because I need some kind of in and out and counter rotation to get my entries proper. And this just fell out of balance. So when I look at this, I don't look at this and go, damn, I should be short. I did on ES. But I don't look at this and go, damn, I should be short. I look at this and go, wow, they just dropped it straight out of bed. And what that was is usually is a hedge fund that decided, hey, they're bailing and they're gone. I know there's a small downtrend here. I can see it. But it was slow motion all the way through here. And if you look at the time on that CL, they didn't drop it. Good Lord, what's wrong with this chart? They didn't start dropping this thing until 12 o'clock, and I'm usually done by 11 on this thing. So this is the area I try to make money, and there's nothing for me to do. I'm kosher with that. That's okay, right? No big deal. So the first understanding comes from so there's a certain set of understandings that you have to have. Number one, when we come in, it would be reasonable to assume that they're going to resume or attempt a continued trend up. When we got to the 50 retrace at 11 o'clock, 10 o'clock, whatever that is, it would be safe to assume that the trend day up is over. And even at that, at the 50 retrace, I wouldn't say we were going to roll all the way down. I'd say we're probably going to balance. And this is probably what I was looking at balance. I want to show you how my mindset changed, right? Here, I'm going potential trend up. We can't get underneath the last rotation. Here's the 50 retrace, approximately right in here. And I'm going, okay, we came to the 50 retrace. Probably some variation of balance through here for the rest of the day, right? Then we get underneath the 62 retrace right over here, and I go, oh, that's bad. When we come out of trend up and then we close underneath the 62 retrace, that ends up putting a lot of pressure on trap buyers, and we tend to close, or we have significantly increased odds of closing lower. What are those odds? They probably went from 0, right? Close on the low is a pretty rare event. And anyone in the room can ask questions while I'm going through this if you have a question about it. But that's a pretty low event, right? I think if you take all the days where we close on the low, even in a bear market, I think it's sub 18% of all trading days, right? Even in worst case scenarios, they usually bounce, right? So it's very low odds. But in that particular setup where you have trend day up or trend overnight up, and then it breaks the 62 retrace, it's bad. So that now in my mindset, I'm like, hey, that's interesting, right? But we're pretty vicious here, and we V-shape almost all the way back up to the 768 retrace, right? And it's kind of hard. So here, if I was thinking, one of the things that got me frustrated is over here, I'm kind of thinking, hey, why don't we take the stop out over here, right? Why don't we take the stops, then trap back in? Like in my mind, that's what I was visualizing, and then let's run it down like that, right? So that's and then you combine the anomalies and the profile, and that kind of puts it in there. But also, if you look where we were making money this morning, so I don't know how many trades in a row we had profitable on ES, but it was a bunch of, right? I think it was like 6 out of 7. Was that right? Approximately, or maybe it was 4 out of 5. I had a bunch of trades this morning. I forget what they were, but almost every one hit. And like I said, the only one that didn't hit, Richard's keeping track. What is it, Richard? 4 out of 5. And the 5 was the last one, right? The stop was the last one where I took a scale and let the balance stop. Okay, so all of them went to profitability. The one that I tried to trail out and let it roll, that one stopped. Okay? So next, when I'm looking at this, right? So when I'm looking at this, look how fast the bars are changing. This is 8 o'clock right here. This is 8:30 when we're opened up, right? See how this is kind of gentle and rolling? Look how many bars are being formed here. Like this is a boatload of, look at, so you can see the count changed, right? And that can tell you that there's a change in velocity. So from here, from 8:30 to 9:30, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bars, right? That's pretty manageable on a 5-minute chart. From 11:30 to 12:30, right? We ended up with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Now, why is that important, right? So ask yourself a question. Where's usually slower during the day? Oh, you know what? These are 5-minute bars. I apologize. This doesn't count. It's going to be equal. It's on the, here, let's switch over. Now I know why I'm feeling nutty. There we go. I'm going to up this a little bit so it's easier to read. Chart settings. I'm going to actually make it a 2, 3, 4, 5-point bar. So that's 5 times 4, 20. Okay. Now I'll get the right count. I apologize. Okay. $8:30, 9:30. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57, let's call it 60. Okay? Now, I'm going to scoot over, and I'm going to come to just after New York lunch, 12 o'clock. Okay? And I'm going to start from 12 to 1. Right? Essentially the first hour post New York lunch. All right? So these are range bars, right? You have to move a certain amount to print. So that's 12 to 1 o'clock. Right there. Is that right? That's approximately right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, and we had almost 60. Wow, that was half. Okay, somewhere in here, the number of bars just shot through the roof in that 1 hour period. I don't know if it was right in here or where. Oh, you know what? It's 5-range bars. Somewhere in here, we just had a massive number of bars being formed. So I apologize. I went off track on the point I was trying to make. But the point is, that New York lunch for a range bar, right, it should be really slow. Like yesterday was pretty slow at New York lunch. If we go back and look at Monday, so here's that 12 to 1 right here. It's the same slice of time, roughly. Right? And you had 1, 2, 3, 4, 5, 6, 7, 8. 8 bars form. What did we just count? 23 or something like that? Like it's, if you, so what I'm trying to do here, I'm sure I sound like a lunatic, but that's all right. What I'm trying to do is say, hey, look, there's a time frame issue here, right? And a speed and processing issue. When this forms 8 bars, I can read this pretty easily. Like, let me give you an example, guys, for the room. So see on that 5-range bar right there? I can do this, even without the algos. So the algo says parallel algos to the downside, right? So I know when I close above those with a point of control above, right there, again, when I close above with a point of control above, so it's not 1, it's 1, you got to count them. 1 algo trigger, pink arrow, 2 algo triggers, right? 1, 2, closes with a point of above, right? And you have to leave enough room for it to wiggle around in there because of the time of day, right? But 1, 2, if it's not the first close, it's the second close, right? And off it goes on its merry way, right? Secondly, if you look at this, so I'm going to erase this again, right? Why is this easy for me to see? Because it's going slowly. I can see over here that this, because of my fractals, is a potential left shoulder, right? What do we know about the left shoulder? If you look, this is my stopped out seller, so I'm jumping here a little bit, and my seller gets stopped out, right? This seller gets stopped out. It's my last seller to get stopped out. So, if I draw a line underneath them, you will notice, where's my line? Right there. So again, I don't like the shooting star bars. I like the full bars underneath, right? So failure to close underneath with a full bar with a point of control underneath, right? We get back above. Here's the first attempt to break that left shoulder, right? And you can argue, okay, so you can argue that it failed, which is fine. I don't care. Or if you use the tight stop, it stops you for 5 points. Again, I think most of these need 8 to 10 points right now. This is a big bar. This is 5 bars. So I'm going to do something here. I'm going to switch gears for a second. Watch this. So we're going to look at it on a range that we would normally look on, so it makes more sense. Okay, there we go. So there, see how clearly now? Look at this. So now we're pretty clear, right? We have a very defined and clear head and shoulders, and it's in 2 places. So this is the exact same time frame, right? And this, for people who are watching the video, this is the time frame we normally operate on, 2.5, 3 range in this current environment, right? So I'm going to put a horizontal line right here, right? This is my last stopped out seller sitting right over here. So I need to get underneath. Right? So remember time of day, right? And again, this isn't off the low, this is off the high, so it would actually be okay if you said, hey, this is a potential head and shoulders, right? So think about the elements that we're missing, guys. So forgive me, I'm stepping back here for a second, right? Let me step back for a second. So the first thing is, I can read this pace, right? This is very slow, sideways trading. It looks like we tried to break out above. We trap back into the left shoulder, right? I can see that even though this wasn't a very clean left shoulder, I had plenty of fractals to assume right? I've had plenty of practice to assume I have a left shoulder ahead and that they're going to attempt on the right. And I even closed underneath, right? So, I'm going to spread this out. As a trader, as Richard so amply pointed out, and this is straight from FT71, right? Any trade has a 50-50 chance of working. Even if you have a 99% win rate, right? 99 out of 100 win, since the one loss is randomly distributed and you don't know where it's going to pop out, your win rate for any single trade is 50-50. Does that make sense, everyone? Okay, that's a very important concept. Because if I short this, right, and I go, there's the trap, I'm underneath the seller, and I'm going to add on the backside test right over here, do I get to profitability? So there's two things here, right? Because you got to remember, I was talking to Bill, who's in the room earlier, and Bill was saying, look, I was trying to figure out how to explain it because I was frustrated, right? If you're new to trading and you shorted this 26.16 or 26.15 on the backside test, it went profitable, okay? If we look, got the crosshair tool, and I shorted right here, which is the backside test of this area where I would have entered, it went down to 26.13. Now, is that a winning trade for me? No. Why? I would have never in a million years in this environment scaled 2 points, maybe 5 points, not 2. So this would have been a net loser for me, okay? But now watch the whole process unfold, okay? Now watch the whole process unfold. What do I know? So I have a list of things that I want. I want a potential head and shoulders, right? I want a stopped out. And where do I want that stopped out seller? I want that stopped out seller usually up in the head, not on the left shoulder, okay? So you want to write this down. This is basically a coaching session where I do one-on-one. This is more advanced stuff. So I want the stopped out seller to be in the head and not on the left shoulder. It's not that it can't work in the left shoulder. It's just better, right? Like vanilla ice cream's okay. Strawberry cheesecake, Haagen-Dazs ice cream is more fantastic, right? So it's good. It's just not great, right? But here's what I find people doing, okay? I'm telling you right now as a trader, if I'd been here, and I'm going to throw the rest of my read out the window, right? Because yesterday, what is this? This is Monday. So yesterday I was only looking long. I had no shorts. I actually had a horrible day. I had electronic problems, blah, 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 but I wasn't trading. So this never happened, right? I never took this short, and I said in the room right out of the gate, it's no shorts, we're on trend day up, right? I simply was not looking short at all in ES today, that day. But even if I had been, right? What I find a lot of my coaching clients, particularly when they're doing homework, is they go, oh, I wouldn't have taken it because I would have magically known. Now, you could have said it's trend day up, I'm not going to short. But let's say we didn't say that, and we assumed a two-sided trade, right? If that were to be the case, and let's say I did take that trade. So let's just stay with the thought. I am going to take this trade. So what else do I not want right here? I know that I don't want to get my buyer stopped out, right? And I've said this in the room. I said, here's my buyer, and I don't want this guy stopped out. And if he does get stopped out, I don't want to get it back above that buyer. Why do I not want to get back above that buyer? Because you now have a trapped seller. I know that sounds bizarre, but trust me, in my head it makes total sense. Now I have a trapped seller down there. They suckered in the first set of buyers. They stopped them out, and they're ready to rip it the other way. So therefore, I'm going to draw a line over this, right? I'm going to say if we close, and I said this today earlier in the room, I said if you close with a positive bar with the point of control above, right? Right, so normally if I took this trade at 26.16 or 26.15, right, I would say the stop is 26.23, right? 8 points, 26.23, right? So now I'm going to go, hey, wait a minute. We closed above. Now I'm left with a conundrum here, right? I know that bar closing above diminishes the odds of that trade working below 50%. Because I've just seen so many examples, I just know that to be a truth, right? Below 50%. Okay? So now I have a hard decision to make, right? Most people get very emotionally invested in this trade, but there's two things you can do here. Well, if it's true, this guy gets stopped out. So Randy, here's where you can come in. I got stopped out. If you think they're going to reverse it, so yesterday was a trend day up, so you had a good odds of it actually going up, right? So now, here's the close above. Here's the backside test right there, right? But we're not done yet, right? We are not done with this trade. Now scoot a little bit further over. See how all this is readable? Look how much time this is taking to develop. The trap. This whole process starts at 12:30. We're over here at 13:17. We're still having time to make a trading decision at 13:45. A lot of time to process what the hell is going on, right? A lot of time to process what the hell is going on. So next, stay with me. This gets good. Gets better. Hold on 1 second for me. I gotta check one other thing. I apologize. Just make sure I'm not neglecting my kids here real quick. Make sure everything's squared away. All's good. Okay. So over here, right? So over here, I can take the backside test. But now come back and look at this picture a little bit bigger. Right? What am I constantly hammering? Left shoulder, head, right shoulder. What happens if we close above the right shoulder? Right? This is the bar that closes above the right shoulder. And I draw that line constantly, right? Squeeze up. Now, here's the problem again. You have to leave room, right? You have to leave room for noise, particularly when you're trading near the high of the day. It doesn't work as well as when it comes at the low of the day, right? So now, I can initiate over here. If I initiate here, all right, let's put another line where we're going to initiate. 26, 27.50. Let's say I just hit market there. How far does it go against me? Why is that important? Because I don't want to take this trade if I can't stay in the damn thing, right? Here's what happens. People go, well, I want to take it here if it'll do this. But if it's going to do this, I definitely don't want to get in the trade. Right now, surrounding on this, if I said, right, very simple. If I go on Twitter and I draw this out, and I go this, 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 and I say long right here, X marks the spot, right, and I don't put a stop in, I look like an insane genius, right? That was a beautiful entry, right? Here's where the problem comes for day traders. How much of a stop can you put on this trade, right? What the stop on this trade required, right? The stop on this trade required was 26.15, and your entry was 26.27, 12 points. That requires that you either don't take the trade. Let's say you can only take a max of 10-point stop. Let's say you're trading the contract. I can't take more than 10 points, Simon. Okay, no problem. If you can't take more than 10 points, and the trade demands a 26.15 stop, right? Then what you got to do is wait till it pulls back far enough to give you your entry. Don't scoot your stop up. All you're going to do is get stopped. Do it the other way around. Go, I hope it comes back. Sometimes you don't get filled. Happened to me on a big trade, right? I limited in, didn't fill me, and it went. Happens, right? It's not a big deal. Now, rolling along, the question is, so if I took this trade, did the trade work? Yes. Did the trade work for most day traders in my room? No. Almost everyone would have been stopped because I still would have said with an 8-point stop, and actually this was the entry right here, so I stand corrected, but still, everyone would have gotten stopped if they had taken that, right? Now, going to follow up the same point of being able to trade multiple trades in succession of where your odds play out. So let's say we did this normal, and I said I'm just going to take it. I'm taking it here with an 8-point stop, and I get stopped. -8. Okay? We'll just call that X, 10, but call it 8. All right? And I take it again right here. As I said, that's the second close above, And this time my stop again, it's 23, 15, it's basically 8 points again. I might have to, if I have a small account, I might have to do it with the micros, right? I'm going to say that again. If I have a small account, I might have to do it with the micros. Now, just follow me, okay? If you took this trade the next time, this trade net was worth 26.24 to 26.57, okay? On a trend day up, you covered your 8-point stop, right? You entered at 26, looks like 23. You're able to take it up to 57. That's 30 points, right? Took out your 8-point stops, and you made 20 points. Now, here's the other side of it. You can go, but Simon, I'm a small trader, so I scale at 5 and 10 points. That's still all right. If you took your trades and process over here, you recovered your trade and you're flat, and you can move on to your next trade. Doesn't matter. Not everyone has a big enough account or the wherewithal to see the trades. I know it happens to me all the time. I just scale out because I can't, we don't know where it's going. And that's all right, right? Yesterday was an exceptional day, not a problem. Now, bring it over here. I want to show you something. See how all the time we had to make a decision over here? This is where we were having the conversation this afternoon. Was centering around 1 o'clock today. Okay? First of all, you just saw before, this is 1 o'clock. This is 1:23. Look at all the bars that are forming there. It's really, 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 really fast. Okay? But even under that process, what are the things I'm looking for on the priority side of the schedule before I make the trading decision, the last trading decision? What's the big ones? So, let's go do that. Earlier in the day, I'll show you where I missed my massive trade. Let's see if I messed it up or not. We'll go back and look. So I know this area right here is the 50-60 retrace from the swing low, from the most obvious swing low, which was about 11 or midnight last night, right? So what am I looking for there? And let's see if I goofed it. I bet I goofed it is what's going to end up happening. Here's why I hesitated on this. This was my potential originally. This is my potential left shoulder over here. It's way away. But see here, there's a fractal right over here. Okay, that's my potential left shoulder. So first thing is, so this is always easier. Realize from here to here, I had just a precious few minutes to make a decision, right? I really couldn't go through everything and make a good decision, right? I had point blank, very little time to make a good trading decision, right? So then, hold on, I'm thinking. So then this becomes, sorry, it's late in the day and I've been going at it since 4:45 or 5. And I got to have enough energy to run my kids. So look right over here. See this on this head and shoulders? This is really important. So when I'm coaching someone, what happens is what I find is everyone's natural instinct is they want it to look perfect, right? They want it to look like what it looks like in a textbook that you can pick up at Barnes & Noble. And it doesn't work that way, okay? It's going to be a little sloppy, right? So what are we looking for? There's a potential head and shoulders here. Here's my stopped out buyer right over here. See that? Okay, Randy, I'm going to put a line above that. Because when I get above this, okay, so I want to show you two things. This is my last, importantly, my last stopped out buyer, and this is a left shoulder. So I have three things going on simultaneously. Let's break them down, okay? I've got a potential left shoulder. I've got a break of a swing. So now I can draw a 50-60 retrace. Okay, that trade by itself, this right here, meaning break the swing, 50-60 retrace, depending on market conditions, is a 40 to 60% trade. If you just took that trade, you had no help with the algo, you didn't know jack shit about what I was talking about, you should be able to be profitable if you don't over leverage on that trade by itself. So we have one piece. The problem for me is I trade very, very leveraged. If I trade very, very leveraged, A 40 to 50% win rate puts me in bankruptcy. I cannot survive. Okay? So, while you look over Twitter and StockTwits and internet and everyone else, everyone will draw out the magic of a 50-60 trade. Remember what my objective is when I sit down to trade. I have two objectives. Teach other people how to trade, if possible. But my number one objective is to load the shit out of a leveraged position and nail it like I did this morning. That is my objective, right? And I killed it this morning. My P&L was fantastico beyond belief. It's one of my best days. If I hadn't had the CL trade, I nailed it today. I was able to upsize my trade size. Liquidity was good, right? If it wasn't for the CL trade I took last week, that would have been the trade of the year for me. The few trades that I took, I think, right? I'm going to have to go back and look, but it was really good, right? So this is not sufficient information for me. So I'm going to add information. Stopped out buyer. That's really good information for me, okay? But if I take the backside test of my stopped out buyer, so we close above, not here, it's just too close, right? So I think we closed above over here is where I think we closed above, because the top of that bar is approximately right here. Oh, no, I take it back. It was actually here. Erase that. So, Randy, I can take half my trade here and the other half on the backside test, right? I can take all of it on the backside test, and that trade by itself, right, was worth roughly let's call it $26.89 to $26.95. 6 points, right? That represents $300, I think. 6 times 5. $300 per ES full contract. Okay? That's a good trade. It was set up with discipline. You had a stopped out buyer, right? You were able to enter. Richard, to answer your question, is it a 1-to-1 RR? No, probably what I'm going to say is I'm going to put an 8-point stop. That's going to put me at a 87. It's going to put me at a 79 stop. Okay, so two things go on there, right? Richard, are you still with us? Okay, so Richard, that puts my stop back here. Richard had a great point earlier. My stop's approximately here. If I take this entry right over here at 88, right, I'm putting my stop at 80 or 79 or something, somewhere right in this area, right down here, right? So, but it's below 8. It's at least 80. And it's probably in this case closer to 78, 79. And just so you know, this is where 80 is in case you can't see it. That's 80. So the 8-point stop would have kept, and realistically, I'm probably at 79 or something like that. Exactly, and you had a dominant wave right over here, right? So now wait a minute. This gets more complicated because people go, well, why do I fail day trading, right? What am I doing? If you have your stop in the wrong place, right, you go, well, it shouldn't get past the 62, so I'm just going to use a 5-point stop. This is a losing trade for you. Congratulations, you're pissed, right? Especially when you watch what it does off to the right, right? So I think I missed this trade today. I forget what time. I had a lot of good trades today. Maybe it was a later trade that I missed. But I think I missed this, or I missed a later one. It was worth a lot, right? I just didn't get backside tested. But for me, how I'm going to enter that trade, now I see potential left shoulder, head, right shoulder, left shoulder. So what do I have now? As Joyce, one of my coaching clients, describes it, I have a frog. And I like that. My wife went to TCU. And they are the horned frogs. And I like that. Right? So here's the other side of that trade. So this is left shoulder, right shoulder. Why do I know? So remember, look at the chart. What's going on here, right? Am I looking to get short or long in the middle of the day, in the middle of the morning after a 50-60 back, first time into the 50-60? So my mentality plays a big part in this because I'm not going to take any short bait here. I'm going to go if the short works, shit, that's nice. But I'm not playing the short side. So when I see this, right, when I see this frog, as Joyce likes to put it, head, shoulder, shoulder, it's basically you're collapsing two structures right on top of each other, right? So now I need a bias. right? Well, my bias was long. I had marked it out. Hey, I'm looking for the 50-60, right? That's the 50-60 right there, right? So I have multiple ways to play this, and this confuses people, right? There's not just one flavor. There's multiple ways to play this trade. You could play it on the backside test of your stopped out buyer, which I like, right? You can play it for a head and shoulders, test of the left shoulder, test of the right shoulder on the left shoulder. I like that too, right? That comes right over here, right? Now, within this process, right, within this process, you got a stopped out seller, Randy, and that was right here. These two guys, and we got underneath them. So I'm going to stop for a second there, and I'm going to duplicate this chart. So I want to show you something, because this throws people. 9:30. Okay, this is effectively a free coaching session for everyone. Okay. This confuses people, so I'm going to unconfuse. Okay? It does, Dean. You're correct. So, when you look over here, and you're going to go, but Simon, you had a stopped out seller, and we're now underneath, right there. So I want to point out two things, right? When people look at a trade and they're day trading, right, they go and look at this and go, well, shit, why weren't you getting long? Why would anyone short that? Okay? So number one, depends on your perspective, right? Depends on your perspective and what you're trying to accomplish with your trading. Okay? I'm going to say that again. Depends on your perspective and what you're trying to trade. If your goal is simply to take the backside test of the stopped out buyer and seller, that works all day long, right? And that was worth roughly $26.85 down to $26.79. Think about that for a second. You trade one contract, that was $250 basically, or $300, right? I want to say that again. This trade was $250 or $300 on the backside test, and this trade was $250 or $300 on the backside test, right? Okay? For a lot of people, right, particularly people who aren't working right now maybe, shit, $300, I take that all damn day long. But I'm not playing for $300, right? And I'm playing to trade where I think the market's going, and I'm looking for setups that align that, right? But just remember, if my attitude is, hey, I want to catch a 100-point trade, and it is right now because it's possible, right? That doesn't mean Dean, who's in the room, maybe Dean's a new trader, and Dean goes, shit, $300 a day freaking rocks it up for me, buys me my burger and my beer, and I can relax at night, right? He may say that, right? Versus Peter, Dean, you're funny. Versus Peter, right? So Peter's not in the room right now, but I coach him. Peter's a big swinging options trader, right? Peter goes, $300. He'll just laugh. He'll just go, $300. And he'll be like, you got to be kidding me. Why am I putting on a position for $300? Right? That guy trades a lot of freaking, I think his minimum trade size, 200 or 300 contracts. Right? He's not going to put that on for 5 points. He'd be like, that's stupid. I'm not going to do that. Different perspective, different objectives. But we all have the same arena under which we have to make that trading decision. So, when you move along through here, Randy, and if you would have said, so Randy, I'm pointing this out. Yes, you had a stopped out seller right here. You got underneath them. You backside tested, and then it went, and it did go lower. Okay? However, because we're in the big picture 50-60, I don't give a shit about this. I go, I hope that doesn't work. But and not only that, right, now complicated a little bit. If this is my left shoulder of my head and bearish head and shoulders, and this is my left shoulder of my bullish head and shoulders, right? This structure. So Richard, you were asking me about structure this morning, I think in the preview. Was it you? Was that correct? And you're asking which way will I lean on a trade, or how will I figure that out? Okay. So if this structure, right, this structure, the head over here, the frog basically, right? See the frog? Little frog legs? If that structure, right, gives me my biggest trades. Like when I see this, I get very pumped because I know, hey, I potentially have a big trade to work out. So now I have to back it out. Is it going to come to the short side, or is it going to come to the long side? Or worst case scenario, am I not going to understand what's going on here, and I'm going to let myself get stopped out on both sides of this with an improper stop? Okay? So what I'm going to do, right? So what I'm going to do is I'm going to go, screw that noise. Okay? I'm going to back out. I'm going to go, I'm going to go to a checklist. I'm in the days 50, 60. Buyers are in overall control. It's unlikely that we're just going to fall apart, and if it does, how am I willing to pay for that risk? So see, that's the question. The question's more important than the answer, actually. Where am I willing to lose money? So over here, I'm willing to lose money here on the backside test, and my stopped out buyer, which is this super group of guys over here, right? I'm willing to lose money. So now I have a head and shoulders over here, right? They've attempted to enforce it, and so they did so successfully, right? Because it came down, came up, tested, and went lower, right? So remember, I showed you the example earlier where if you took the close of the left shoulder, right? So I promise you, I can show you 200 examples of this, and between 65 and 75 have some pattern. Actually, I bet it would be higher, but have some pattern that results in a big push to the upside. Sometimes it comes all the way down here one more time and then makes the push. Sometimes it just consolidates for hours, right? Those markets suck. And then it makes the push, right? But I had everything I was looking for. I built what I call a pressure area because there was a lot of competing interests going on in the same area. I had sellers trapping themselves at a key retrace area. And now I had everything that I was looking for. Notice I haven't mentioned the algo yet, right? This is all just shit that's out there that I know from years of trading. I understand the pattern by itself, right? But now I'm going to put the algo in place, okay? So notice we have, let's count them. 1, 2, 3, 4, 5 distinct entries for 5 distinct trades, all in the same area. And if you count the short potentialities, you can add 2 more, 7, all in the same area. So what the F are you going to do? It's a really good question. Because if you're not, when I'm coaching guys in trading, right, everyone always comes to me, many people come to me, and go, just tell me the secret. Well, there it is, right there, right? But until you know, okay, let's count them. Richard, you count. I'll do it, okay? Break of the swing. $50, $60 back. 1. Stopped out trader. Close above. Backside. Close above, backside test. 2, right? Left shoulder, head, tested the left shoulder. 3, potential head and shoulders. Close back in. Oh wait, we're not counting the shorts. Scratch that, scratch that. So let's see, I did 50, 60. Stopped out buyers. Inverted head and shoulder. We will count it here. So I'm going to count this as the long. What is that? 1, 2, 3. Head and shoulders, left shoulder. So, Richard, give me a count. Stopped out, right? Stopped out. 50, 60 back. 2. Tested the left shoulder on the right shoulder. 3. close above the inverted head and shoulders for, I had some other combo in here. Let's see if I can figure it out. For, it's 4. Sorry, I added. How about 4? Does that make more sense? And then if you add the shorts in there, that would set up two more trades, 6. So we'll go with 4. Thank you for calling me out. You know, I need engineers around me because my math skills suck, right? Okay, so but look at the confusion that people have with trading. That's just 4 potential long entries. So that means you have 4 potential targets, 4 potential stops, 4 potential judgments to make, right? And as you develop as a trader, right? So when I started as a trader, right, what I saw all day long was this. This is all I traded. This was it. Break the swing, 50, 60 back, stop below the swing, all day long. I didn't even know what a market profile was. That's all I traded, right? And if we were in a bull market, I just went long. So I started trading in the 90s, right? A lot of bull markets in the 90s, especially in technology. So I just traded that. Made a lot of money just trading that. You can make a lot of money just trading that by itself, right? But now, as I've gotten bigger and bigger, I want to be damn sure. I want to be damn sure what I'm taking, and I want to understand how the energy develops in the trade so I can take bigger trades, right? So now, I know what I wanted to do. I wanted to count the algo, right? So what the algo tells me is where energy is expanded. That's as much as I'm going to explain about it because it's confusing. It took us a long time to figure it out. But if you just remember, I'm looking for energy to be trapped, right? So, and then I'm looking for it to make place within the context of where I'm taking the trade. So these little purple, let's just stay with the purple lines, not overcomplicate it. They tell me where energy is being trapped. There's a simple rule to using it if you're in the room, okay? I want energy to express itself on the way down and get above it, right? And on the way up, I want energy to be expressed to the upside and get below it, right? Hence, trapping energy spent, right? And forcing the person who spent that energy to cover their backside, right? So if you look over here, right, just simple example. As we pushed up, so I wouldn't short here for the reasons I just listed. But when I get underneath this bar right here, see how I get underneath, backside test, and it pushes. Just didn't go very far because we're at the low. We're in a 50-60 retrace. It was a bad idea to take a short in here, right? But as this trade is developing, right, so if you look over here, right, so remember, we've been coming down, right, down, 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 down. And what I'm looking for, so let's say this is all I was looking for, right, because that's always where I have to back out the trade, right? So I'm going to do this. Energy, couldn't get above. Energy, couldn't get above. No, 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 no. Because remember, I'm looking for a long, right? Energy, can't get above. Energy, right? So now look how many times people have expended energy, right? 1, 2, 3, 4 times to the downside, right? That takes a lot of pressure to print those bars, okay? So when I'm over here and I'm like, oh, so let's say I didn't understand anything about stopped out buyers and sellers. I didn't understand anything about heads and shoulders. I didn't understand, I haven't even mentioned this stuff down here, right? Let's say I don't understand shit about any of that, right? All I have is this algo to help me out. Long. Now I'm going to look, right? Let's follow it the other way. I'm looking for the bar to get underneath here, going the other way. I don't care about this. See this as it's going up? Does not matter to me because no shit people are selling on the way up. I don't care about the people selling on the way up. I don't care, right? Smart traders sell on the way up. I don't need to know anything about them, right? Doesn't matter. What I want to know is, where's the schmuck, right? I'm looking for the schmuck. schmuck, schmuck. So I just want to point that out. Right at the top, this jackass came in and tried to push. See that? Right there, that's actually a super bar. I'm not going to go into the definition of it. This guy tried to push. As soon as I closed underneath him, see ya. Okay, now, I'm not going to explain how I figured that out or anything else in there, right? But those, yeah, and believe me, I've been the schmuck many times. I promise you, Richard. I specialized in it for a long time, especially after my first 2 blow-ups. Holy shit. So then look at the results as you're going off to the right, right? We are looking to trap these guys. Now watch as you come down. So then the question comes, you've got to put space in this, right? Because what someone will inevitably do is go, well, Simon, what about this one right here, right, where we got above, and it just went and then it broke. Well, that's true, right? So let me ask you a question. Why are you getting long off of Head and Shoulders into the left shoulder of a Head and Shoulders, right? What I want is for it to do this cascading motion, right? And now I want to find where's my trader. So if you look over here, I didn't get him into the hole. See that? This was pretty good. That's also a high odds bar into the hole. And that would have been okay, but we never got above it, right? Now I'm starting to stretch, right? Look at the stretch off the top. That's roughly 2739 to 2683. It's a big freaking stretch, right? So now I want to find my trap seller. Watch as we're coming down today, okay? So would have I taken this? I actually might have taken this here, except anyone in the room kind of go and say, what are we missing over here? Why wouldn't I take this bar over here, right? Anyone? Why wouldn't I take that long by itself right there? Well, not only that, where's my left shoulder? Right? It's got to get all the way over here to trap. So this goes to context again. I am trying to I have about 5 to 8 clean setups. And I'm trying to get them to dance with each other so they'll make sense. Now watch where the turn did come in, right? Watch over here. Fractal, so potential left shoulder, even though it was flat, you can call this larger part the left shoulder. Okay, we'll just draw a line right over here. Okay, so I'm going to point out one of 2 things to people in the room, right? If I get the algo to fire, right, 2 things that are important. So this is me shifting gears. I want to show you how I am thinking about it. It may not work for you. It does work for me. I'm going to go back for a second. I know this is going on, but it's really important, and I want people to understand the value of the algo. When markets are not insane, and I don't think there's 100 points to be garnered necessarily, and I'm just scalping around, okay? I'm just scalping around. So let's play the game through here. What I'm going to play from the top, right? So watch from the top. So you already know I'm not going to take it here. It's a Head and Shoulders. I'm clear on that, right? So I want to see a clean bar close above this, right? So here, doesn't happen here, doesn't happen here, happens, oh, doesn't happen there. You need a point, the little yellow line has to be above. Doesn't happen here, doesn't happen here. Let's see if I get caught out anywhere. No, 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 never sets up. All the way into the hole. I get caught out here? Nope. I get caught out here, okay? See this bar? This bar right here closed on top. I have multiple ways of doing it, and I want to show you something. One of my trades, okay, that I actually just have my algo run for me, is I close above this bar, and that bar is my stop. So this bar on ES represents 2.5 points, right? So that's $125 for that bar. That's how much that one bar represents over there, okay? I want you to watch how the thinking keeps folding in, right? So I'm going to go over here. I'm not going to get triggered here. I'm going to get stopped on this bar, minus 2.5. But then I'm going to take this bar right here. Now remember what I talked about earlier about leverage, understanding where you're at, and understanding the time frame that you're on, right? So when you're over here and I close on this bar right here, which closes above my algo that fires, and I have the same 2-point stop, right? Guess what? I survive on this trade with a 2-point risk, and I end up taking that from 26.63 to 26.88. Now, in that process, okay, right, some people can't think in that. That you can do that all day long, Richard, but sometimes you might end up with 3 or 4 stops in a row, right? If it's not firing correctly, right? And if you came up and did this again, and now you're like looking for the short, sometimes it doesn't set up, right? See how it just doesn't set up into the hole? If you're looking over here, right, let's see if it's set up for us. Sometimes it just doesn't set up on the bottom. See that? Let's see if it's set up anywhere in here. And it stops you right there. It just doesn't set up all the time. But when it does, it's money. So what I want y'all to do is understand this. The number one trade that makes the most amount of money and is easiest to set up. And I'm going to take you through the sequence even at the end of the day. Okay? Stopped out buyer. So this is the hardest time of day to trade, right? You're long right here. Now, once again, for a smaller trader, right? If you went long at 26.65 and change, it went all the way up to 26.72. You got paid, right? If you're me, right? Maybe I took a scale, but I probably got stopped right over here. Assuming I could have traded, this was so blindingly fast and insane, there's no way, right? This is a good example of where you can do it after the market's closed, but it was just too fast, right? So when I get over here, guess what? I stopped out another buyer. The line above that, right? Because I'm all about there's my bar. Closes above. There's my backside test. 8-point stop. Payday. And it was actually a big payday because it just kept ripping, right? Went all the way up to 26.99 from 26.67. 30 points in about, I don't know, 15 minutes, right? I will never catch these because I don't get backside tests, right? If they just fall apart like that, c'est la vie. That sucks. I was looking for the short because I thought we might close on the low. It just never set up. Where it did set up, right here, I'll show you. See this? Again, you had to be lightning quick to draw these. Left shoulder, right shoulder, it looks like this. Closed underneath, right, rolled. This is your potential left shoulder all the way through here now. So your line went over here, right? Trap back in, and if you close underneath, that breaks your right shoulder. Your left shoulder breaks your right shoulder, which is exactly what happened right here. And you're back off to the races. And by the way, right, see the super bars where they closed underneath the super bars? Right, one failed. But Richard, again, if you were looking for the short down here, again, this is the end of the day and it was tricky, right? There's your super bar right there. I actually backside tested it and rolled, right? So it's a different series of setups using that algo. And when it's slow, that's incredibly valuable to me because it just makes it that I don't have to pay attention to every little tick. You know, when your brain's going numb. Today was the opposite. It was mega fast in the afternoon. and I couldn't set up the trades, nor would have I wanted to in the last hour, right? So I'll repeat it again. So let me pause. Does everyone in the room understand that the backside test of that trapped buyer or seller is what I think is the most important trade in the room? Does anyone have a misunderstanding? Have I not been clear? Okay. The next, Randy, I'm waiting for you, buddy. What do you got? It's preferable, yes. Or the high. In other words, if this is my stopped out buyer over here, right? Which it is, right? And I have to get all the way back up here to get along, right? I would prefer the stopped out buyer migrate to the down closer to the low. But I want the last stopped out buyer is primarily what I'm focused on. There's a few exceptions to the rule, but not many. Okay? Next, when that comes within the context of a head and shoulders, you get bonus points because you can make that much more money. Third, it doesn't always set up, and you have to be okay with that. The way to protect against not letting it set up is take half and half. Half on the close above, half on the backside test, and let it roll. Okay? I personally prefer just snagging it on the backside test because I like it like that. It's just a personal opinion thing. It doesn't work better, actually. The better, smarter trade, and when I have to, because it won't give it to me on the backside test, is I just do take half the trade. But I actually get annoyed either way. If I only get half the trade and it's a huge trade, I get annoyed that it didn't give me the backside test. And when it doesn't give me the backside test at all, I also get annoyed. So I kind of want the backside test. That's just me. And if you will size so that you can take trade after trade after trade, you'll be a happy camper. If you don't size like that, you'll be a very sad camper. That's all I can say. Because you will take one trade and you'll hope that's the trade. Also, if you can avoid New York lunch, again, sometimes it works, but most of the time it does not. It's just a chop fest, right? And yeah, we'll go from there. So any questions? So I'm closing it up. Again, this is my style of trading. It's not for everybody. But that's as good as I can explain the methodology without taking someone and baby stepping them through, which in some cases some people need, and that's okay. It is, Randy. What do you? Let me see if I can clarify. Randy, it is. It is the value of the process. So I'm saying you don't have to catch the low, but you need the stop to come somewhere near the low so the setup works. Right? You're correct, but if there's such a wide distance between the 2 points, like you want it to look like this. All right? That's not a good example. Let's get out of the last hour. So this is an example right here, right? So over here, see how the stopped out trader is all the way over here? That's 6 in the morning, but still works, right? So then we come all the way back over here so that this, let me look really carefully. This is my last stopped out trader. All right? He doesn't get stopped out. So my line goes here. Okay. So this is the first bar that closes above. Now I'm going to come over here. And I'm going to put a limit at 69.50. And I'm not going to get hit. And then it goes. So I'm not on the low. I have caught the momentum when it changes. I just need the stop out to come somewhere relatively close to the low. Otherwise, so if you look over here, this guy got stopped out too, right? Had this been the last stopped out buyer right over here, the trade still worked. As a matter of fact, it did a better job for us because it actually gave you a fill. But it wasn't. That was the last stopped out trader. So you don't, it doesn't have to come, there's no way to get a stopped out trader at the low, right? So you just want it relatively close to the low. So if you look today, well, we had that 130 area. We're looking for a long, right, over here. So this is my stopped out trader right there. See that? Not on the low. I'm going to put a line underneath it. Not on the low. Stopped out just underneath, right? Here's the top. I'm looking for a close above. Wow, this one sucked because it didn't come till all the way the heck. I like a full bar and it didn't come till all the way over here. Okay, but what do I do in the room? Then I come in. What's our number there? 17, so I'm going to put it at 18 and a quarter. And I'm going to get filled right there. Make sense? And I'm definitely well off the low there. And that trade takes you from 18 and a quarter to 31 and a quarter. So I don't see how, to me it just clicks. We may just need more practice in coaching, buddy. That may be all there is to it. So anyways, I'm tired. It's 4:30 in the afternoon, 4:20. I want everyone to be successful in the room as much as possible. Good. So I'll record it. I'll post it up on YouTube. And y'all can watch it. Just a quick reminder, right? This is my way of trading. It's not for everybody, right? I am not a genius. I am not any kind of, maybe an idiot savant, actually, but that may be about it, with the emphasis on the idiot. So I just do my best to pull some money down every day. I've been doing it for a long time, so I trade size now. It didn't start that way. It started off with, hey, I kind of don't want to work, right? My dad taught me how to trade. I went to work for McDonald's when I was 16 years old. I found out it sucks, right? I don't like working for other people. Simon does not play well with others unless he's at the top of the pile, right? So I know that about myself. And so my dad gave me a couple bucks. I made a bunch of money. I lost it. Then my dad gave me some more bucks. I made a whole bunch of money, and then I lost it. And my dad said he wouldn't give me any more bucks, so I had to go get my money, and I started over again. And I didn't do it I blew up twice, and that was that. I wasn't going to do that again. And then I decided the most concentrated part of this, right, to give you all an idea. So I started in 1987 as an amateur. I went pro, if you will, in 1994, right? I ran a hedge fund until 2007, from 96 to 07. And then it got too hard with the Patriot Act and all that stuff. And then I've just been trading for myself. And then I was an idiot. My wife made me start helping people out with trading. And that was in 2014. And I really like that part, right? But all of this has come to me over time. And if you'll read any books about how your brain works, it takes time to sports is the perfect analogy, right? We've all watched Tom Brady play football, or Ronaldinho play soccer, or football, as you Europeans like to say. We've watched, Mario. I love kart racing. I've watched Michael Schumacher and Andretti and all these guys, but I can't do anything of what those guys do, even though I've watched out, gone and I can't do any of that, right? I'm just not as good as they are, right? And it's because I haven't spent my entire life. A, I didn't have the skill set. B, I'm 6 foot something. And C, I'm over 200 pounds, so it was never going to be a job for me to begin with. But even with that, right, I didn't get the day after day after day repetition of being in the simulators, being in the cars, going through the practice, kicking the soccer balls, throwing the passes, finding the small nuanced details, and then understanding them. So it's one thing to go, yeah, I get it, Simon, backside test and head and shoulders and all this, but try seeing it in real time. It actually takes a work on your brain to learn how to do it. But once you've got it, you go, oh, that's it. Just like I know, and I said in the room, right, hey, we closed behind the 62. There's great odds we close on the low of the day. I just don't know how it will do it, right? And then we found out the nasty way how it'll do it. So that's my 2 cents. Ha! I don't think so. I mean, ask my wife. She'll disagree with you viciously there. So anyways, I'm out, guys. I'm going to stop the recording.